Hi, I'm Mike Coe with another open interest web extra. Of course, Russia still the dominating story, and as such, we'll start with RSX, the Russia ETF. Suspended creations because the underlying fund can no longer trade the ORDs. That's the ordinary shares. We saw that fall sharply once again. You can, however, still trade the RSX ETF. It's just not going to be able to create new shares. We did see buyers of the March 3 puts, believe it or not. They were spending about 25% of the strike price to buy those. Those are well out of the money. But obviously, some people expressing significant concern about the fact that they're not going to be able to trade the ordinaries anymore. The corn ETF up another 1.1% today and saw more substantial upside call buying. March 28 calls traded nearly 12,000 contracts. INDA, that's the India ETF, is approaching one-year lows, or relatively about 5% away, near $40 a share. At least one investor is concerned about a breach, initiating a substantial hedge, buying 10,000 of the March 40-38 put spreads. Those would pay a little more than 7-to-1 if INDA declines 9% or more by March expiration. Oil was up marginally, but was basically taking a brief pause. The pure beta crude ETN, ticker symbol OIL, doesn't typically trade huge volume, but we did see a purchase of 605 of the March 36 calls for about 95 cents. DVA, the Invesco Agricultural ETF, which invests in soybeans, corn, coffee, cattle, sugar, cocoa, hogs, and wheat, and cotton, saw a big upside call buying. The July 25s traded nearly 22,000 contracts. Here's an interesting one, RNW, Renewable Energy. Not a name we typically discuss. What's interesting here is actually the trade. It traded 14 times the average daily call volume, and a single trade of 30,000 contracts equals roughly 60% of the existing open interest. Looks like somebody sold the July 7.5, 12.5 strangle 15,000 times, collecting about $2.5 million in premium. This is a bet that is going to remain range bound. But it's important to note what that range is, because the range of profitability is very wide here. The seller would see profits as long as RNW is above $5.80 a share or below $14.20 by July expiration. Of course, that wide range is also reflective of the fact that the stock has traded in a wide range. Just take a look at the chart and you can see what's going on there. U.S. Steel, which has a fairly large short interest, rallied along with several other materials names. We saw a big purchase of the March 29 calls today. Copper names also continuing to see tremendous strength. Freeport rally continued, and Southern Copper traded more than 6 times the average daily call volume, including a purchase of 2,000 of the June 90 calls. Cleveland Cliffs traded over 300,000 contracts, 2.5 times the average daily call volume, and a trader bought 10,000 of the May 29 calls, paying $1.25 a contract for those. Broadcom revenues and earnings beat estimates, it seems, but the stock was up only modestly after hours, about 3% at the moment. Some traders appeared to be hedging, including a decent-sized purchase of the April 530 puts. Rails outperformed today, as some have suggested it's a more fuel-efficient carrier, and as such, they benefit on a relative basis as oil prices rise. Good-sized April 270 call purchase was seen, an outlay of over $1 million in premium. The other rails also seeing some strength today. Huddig Building is a small company. I've likely never mentioned it. Even out of the sharp increase of the share price, it trades a mere 7 times earnings on a trailing basis. It would seem that at least one trader wonders if the nesting boom that we've seen in housing stocks and basically the providers of renovations and home building supplies might be coming to an end, because we saw over 5,000 of the June 7.5 puts trade. Hydrofarm, despite ambitious analyst price targets, hit fresh 52-week lows today. The company will be participating in the UBS Global Retail and Consumer Conference on March 10th. We saw 1,500 January 2023 12.5 puts trade for $2.95. That's nearly 24% of the strike. So some options traders are unconvinced that the weakness that we've seen in this one is going to be coming to an end anytime soon. Lockheed, which obviously has had some very big rallies recently, saw some large put purchases. Some have expressed disappointment that Biden didn't hint at higher defense spending during the State of the Union address, and Roscosmos, the Russian space agency, said it would no longer provide or service rocket engines for the International Space Station, including the RD-180s, which were part of a joint venture with Lockheed and Boeing. Coal company Peabody going green. The company announced the launch of R3 Renewables and plans to develop 3.3 gigawatts of solar generating capabilities on their former mining sites. A buyer paid 65 cents for way out of the money April 35 calls. Spartan Nash, the food company, announced a $1 million donation to Ukraine and hiked their dividend by 5%. At only 15.6 times earnings, at least one options trader is betting on large upside moves here, buying over 1,100 of the July 35 calls, paying just over $1 for those. Display maker VZIO reported disappointing results with a fourth quarter revenue miss. The company is down nearly 11% this week, 32% on the year, and an options trader bought 3,500 of the March 13 puts for 90 cents apiece. Gunmaker Smith & Wesson is getting killed after hours, down nearly 20% after a bad earnings miss, reporting earnings of 69 cents a share versus street estimates of about 83 cents a share and a 31% revenue decline versus last year. This suggests that the purchase of 2,000 June 35 calls we saw today won't be on target either. But the good news is the trader was only taking a flyer because they just risked 10 cents each on those contracts. ZipRecruiter is recruiting its own shares with a $100 million share buyback, a higher revenue guide, and 16 cents of EPS versus 12 cents expected. A trader bought 1,500 July 30 calls for 80 cents. Apparently betting that that still has plenty of upside. Finally, Bumble, which reports earnings on the 8th, fell over 18% today. The company, which gets nearly 4% of their revenues from Russia and Ukraine, may have been part of the reason we saw a purchase of 3,600 of the April 17.5 15 put spreads. They obviously believe that maybe the exposure could be a little bit larger. Considering the stock has had such a huge price decline and JP Morgan's estimate was only about 4%, I'm having a hard time trying to figure out why they're making a bet that it's going to be that much downside, but that does seem to be what they're betting on. That's all I have for you today. Thank you very much for watching. If you enjoy this kind of content, please subscribe, hit the notification bell, hit the like button, and actually go ahead and send me some comments. I'd be very happy to respond to your comments and questions if you have any. Thanks for watching. If you liked the content, please consider subscribing to the Open Interest YouTube channel. That's youtube.com/open interest. And of course, you can also follow or tweet me at Michael_Co, or go to our website, www.openinterest.pro. Thanks for watching.